Let's get started. At least a dozen new Forex trading ideas every day at Forex.Today. Hey, good morning, everybody. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You know, it was interesting in class yesterday, a professor was talking about an ad in a newspaper that said that a mutual fund that invested in bonds earned 13%. And why was that not a good deal? And it always came down to past performance is not indicative of future results. The only way they made money is that they were already holding bonds. They were paying high yields at one point, and then interest rates fell, and therefore the price of those assets went up. But of course, once that's happened, there's no way you could actually get that again. It already happened. So past performance is not indicative of future results. And you know what? Do you guys know Jack Schwaggart, I think his name is? The guy that wrote the Market Wizards series of books? His job, before he became a famous author, his job actually was to analyze CTAs, which are fund managers, commodities trading advisors. His job was to analyze their performance and help build portfolios of these CTAs for like a fund of funds type program. And so he was actually a statistical analyst, quantitative analyst, which was really interesting. And so he's actually written a book on it, on the subject, incredibly detailed finance. And there's a whole chapter on why past performance does not predict future results. And if all you did was pick a portfolio of traders that have done well in the past, inevitably they won't do well anymore because they've already peaked by the time you've hired them. So there's nothing but failure. So anyways, if you're interested in that kind of stuff, beyond Market Wizards, that's actually his opinions, not other people's opinions. It's actually pretty good if you like reading 500-page books on math. Anyways, hey, let me introduce myself. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that offers traders Forex, but also energies, metals, indices, and binary options. What a wonderful world it is. Now, let me explain the business model here. TradersWay is investing into your future success today. They want you to be successful. They're providing tools and resources to help you develop skills and confidence so that one day you will trade real money, you'll become a successful trader for many years to come, and you're going to need a broker as a trading partner. And we're hoping that you'll choose TradersWay as your primary broker for your trading career, because we're investing into you up front. Pretty simple business model, so hopefully one day you'll open and fund a account at TradersWay.com. Hey, we do these strategy sessions 7:30 in the morning. It's New York time, a couple hours before Wall Street opens, but it's also London lunch. We do these events Monday through Thursday at Forex.Today and every Friday at FX Street. So good to have you. Doesn't this video just the music make you happy? It just makes me happy. La 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 la. Awesome. So yeah, Forex.Today is where we host these things. If you come over here and register, then you can such as the community chat. Are you guys utilizing that feature? Or are you actually maybe meeting up a few hours before the webinars? And what if there were more webinars besides myself? Isn't that interesting? Would you like to meet up, let's say, in the Asian session or maybe pre-London and develop trade plans before the London Open? All of that's a good idea, right? Well, you got to get involved. Okay? You got to say, this is my community. I want to get involved. I want to see Forex.Today succeed because I like what it does for me and I want it to grow. Was that right, Marina? I'll take a look and see what's going on. So all right. So make it your community. Don't rely on others. All right. So let's get going with the technical analysis. Is that all right? You like the tech? You like the technical analysis? All right. So here we got a prevailing trend. One of the things we talked about, even though this was straight up like a rocket ship, is that if you're still a bear on Aussie dollar, then you got to pick your line. If you're a bear, what you need to do is identify 2 or 3 levels of resistance. So we have a purple area, which we did yesterday, and a darker gray area, which was actually done, I don't know, 5 months ago, 6 months ago. All I did yesterday was drag this across. And there's kind of 2 ideas, right? Perhaps down from here or down from up here. Either way, if you're a bear, you want to look for resistance, and then you wait when price gets into your price zone. Then you look for an opportunity to sell on a smaller time frame, not on a daily. Now, this downward trip that we see here has to do with the governor of the Bank of Japan saying that he doesn't want to add to quantitative easing. This affects a lot of different things. I know this is USD dollar, but that's that. I mean, it affects things. It affects global money flow. But anyways, we had a big bearish move. And this might have been the one, maybe not, but we did talk about a currency pair yesterday that had fallen to a key moving average on some time frame. Forget what, it might not have been this one. But I said, look, if you're at support and you're bear and you sell and you make money, you're still a fool. You're just a lucky fool. You remember talking about you can't be a little bit disciplined or mostly disciplined? Like you can be, like being, a little bit pregnant, right? You're either disciplined or you're not disciplined. And sometimes that means you can't sell, even if you're a bear, you can't sell where we are now. Even if it's falling, you still can't. So anyways, we have this bearish engulfing candle form. Now, another subject that we talked about recently is planning the new trade. Trying to predict where moving averages are going to be in the future. Okay? You know what? Maybe this was it, the 4-hour 21. See how I have it bouncing up and then back down? That plan is still viable. So it must have been the 4-hour 21 we were talking about yesterday. That plan of down to support, up to a lower high, and down is still plannable if you're a bear on this pair. Okay? You're just going to look at it differently. Okay? It just didn't bounce at the first level of support. Okay? So now going to an hourly chart, you could still... Okay, you see this orange line, which was the the old support. Now that's old. Now that's new resistance. So you could take this idea here that we had for yesterday's trading plan, could be today's trading plan. Is that clear? So you got right now in the hourly, you have a Stokes that wants to come down. You've hit some moving averages. Okay. Problem is the Bollinger Band. So again, recently we talked about Bollinger Bands. Wow, we talk about a lot, don't we? It's amazing. We're like just cramming your brain full of information. This upward moving Bollinger Band indicates less people shorting. Okay. So one might look at this falling Bollinger Band as maybe something that will push price down. If it just goes up right through it, I'd be pretty cautious. All right, so anyways, Asim says we're in a role reversal region again. All right, so are you talking about this? Is that what you see, Asim? Or you saw him? Oh, well, that would be a sell zone. For those that are bearish, or I mean bullish on this, this is what I thought he was talking about, but it wasn't, but I'll use it anyways. You see, somebody bought this because it was a 786 retracement. Okay? Sort of the end of the world, right? For this upward move, this is the Alamo, is what I often call it, right? This is the last line of defense, because if we got any lower than this, it changes things a lot. What do you call something that is greater than a 786 retracement? Because we have the 382, we have a 50%, we have a 618, and then we have a 786. Well, what if it's more than a 786? No. Then it's just a reversal. It's not a retracement, it's a reversal. So if it didn't move up here, it's over. This is like dead, this upward move. Because what should happen at this point, let me move this now, if it made a lower low, then it definitely is going to make a lower high. But I've already kind of got this priced out to make a lower high now because of the 786. So just think of it. If it's so bullish, why have we had an 80% retracement? Where are the bulls? If it's so bullish. Mike says anything beyond a 618. Well, that's, that's not wrong. I'm okay with that. Okay? Because, this isn't bearish, but I'm still thinking it's such a retracement that it's going to be bearish somewhere. Okay? Okay. So the question is, those are going to go all the way up and double top and then drop? Yeah, so, you know. Just wondering if it was this one that we were talking about yesterday. Well, whatever. Funny thing is, you can see we have it coming down at these levels anyways. I don't know what it was. I think it was this 21, wasn't it? I had it like, I said you can't sell it here. If you sell it and make money, right, it's still a bad trade in my opinion. So it did fall. Doesn't mean you have to be on it. All right. Or just stop using the moving averages. If you're going to ignore the moving averages, then stop using them. All right. So let's look at Piggy. British pound, US dollar. Okay. Looks like someone wants to buy that pound again, huh? Okay. And I have 3 levels of support. When we were up here, up high. Right? Isn't that interesting? That's why I'm telling you, and I know you hear it, and then I know it goes away. I wonder where this, it must be this. I know you, I don't want to do that. I know you hear it, and then it goes away, and you keep doing what you have always done. But if you make a decision ahead of time, whether you're a bull or a bear, and then you simply wait, on the long run, you're going to be better off. Okay? So even though it fell for several days, and for all logical reasons, of course, and you watched it fall, but you're a bull, and you did things like simply analyze the next level of support. It's much easier. I'm just saying, if you were a bull and you saw it reversing here at an obvious role reversal, it's pretty buyable if you've already committed to being a bull. Where it gets difficult is that you're watching it fall, so then you want to sell it, and then you watch it rise, and then you want to buy it, and you're late all the time, right? So this goes back to, flipping the coin, right, Mike? Just if the only thing you're allowed to do is buy this pair, for example. If that's all you could do, there was no other scenario, then you would simply wait for the opportunity, and you get down into here, and then maybe you drop into a 15-minute chart, and you're waiting for it, and you can see, an up, a down, an up, a down, right? An up, a down, totally a breakout here, and then down this one, and then, there ends up being some trades, right? Okay. Yeah, well, John says even a bear would be cautious at that point, and that's why it's support. Remember, we got a couple of things have to happen. One, bears that need to take some profit, And then 2, bulls need to get in. Right? So like, let me zoom back in and then I'll move on to a different currency pair. This part in here, all of this hesitation here, then this hesitation here, and then see nothing, 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 nothing. That's the bears taking profit. And then all of a sudden the bulls get in the game here. Okay? You can even see the bears selling here or bulls taking profit at this resistance level, right? You can even see it, what they're doing. If you were a bull, you probably would have taken profit in there, or at least been eyeballing it, right? Or a bear would have sold there, wouldn't they? Wouldn't you think that there'd be some orders in my little purple area? Whether they're profit orders or sell orders, right? Yeah, Mike, you might be making, of course I can't speak for you, right? But you if you see lots of areas, I mean there are lots of areas, but you have to filter and discern major ones. So let me go back to this 4 hour, okay? I did this for you, I guess yesterday or the day before. Those are where I see, okay? I see we bottomed out here. I see top, 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 top here. Right? And then up here, I see this clearly was support, so in the future it could be resistance. So in this case, I only have 3 levels of support that I really care about. Now, could you remember, support and resistance is subjective, right? So you could have it like this if you wanted. I'm fine with that. And then this, I have it here, okay? Because I'm trying to grab these tops and these wicks. Okay? Now, do you go wicks or do you go real body? Again, very subjective. Whatever you want. Okay? Yeah, I'm not saying it's easy, right? Because other people also use like channels, right? Sloping trend lines. Well, that's extremely subjective. So that's why I tend to use that type of analysis less and less. Yeah, so there's not, so what you want, Mike says there's so many ways I get confused. Yeah, well, I believe I do too. So pick one way and don't do any of the other ways. So you very rarely see me do channel lines, right? You don't really see them from me. It's not that I don't think they work. I just, like, for example, someone might grab these tops this way, right, and then move this, I don't know, like this or like that. I don't know. I tend not to do that so much. Okay. I also like pivot points, Mike. So you might want to use pivot points because pivot points are not subjective. They measure the time frame you're measuring, whether it's daily pivot points, weekly pivot points, monthly pivot points. Hey, if you want 4-hour pivot points, be my guest. But just use them. And they're not subjective because they measure the high, low, and close of that time period. Divide by 3, and you get a weighted central average. Okay? Not subjective at all. So Sam says, what time frame are the best for pivots? Well, it depends on the type of trading you do, right? But even then, I like to cluster them. So let's move on to a different pair. I don't know, Euro USD. La 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 la. Of course, I don't seem to have any on this. All right, so let me change the template to awesome. Where's my awesome template? Everything is awesome. All right. So here's other levels of support and resistance you might like, Mike. Okay, so what's going on in this chart? Well, I'm looking at individual trading sessions. Here's the Auckland, New Zealand, Asia Pacific Open. It moved 13 pips. Then Tokyo opened and moved 34 pips. London opened, moved 48 pips. New York opened, moved 40 pips, so on and so forth. How lovely. Okay. Another thing that I like to look at, yesterday's high, yesterday's low. Why is that important? Lucas says trade range. Ron says established support and resistance. Any other guesses? Momentum. Thank you, Demeter. Sam, trend. Imad for trend. Sean for breakouts. Aha! See, YJ's got an advantage. He's got an edge. He's been here forever. YJ's been here so long, he's got a long beard, right? Long white beard. And do you have a mole with long hairs growing out of him, YJ? Makes you look very wise. Right? So, trading ancient, yeah. I still have this picture of YJ in my brain. I imagined him one day he was doing Tai Chi wearing spandex but smoking a cigarette at the same time. Oh, it's such a vision. Yeah. All right. So, yeah, YJ's nailed it. What can I say? YJ's absolutely totally right. So, yeah, I use it to establish fibs. Why? Well, do you remember last week we spoke about trying to guess where tomorrow's 5 EMA is going to be placed, but trade that today? That's one of the things, right? Okay, so I'm trying to fib. So let's say I thought this was rising. Okay, yesterday's low, yesterday's high. Where would the 5 EMA be today? What would I be looking to do in the new day based on yesterday's trading range? Well, if we're trending up, then I would like to buy somewhere between the 382 and 618 Fibonacci retracement, right? We all agree? It's just a simple Fibonacci study. I call it the sweet spot, right? Okay. So this would be my plan for the day. There's the 618, there's the 50%, right? there's the 382. And all I've done is measured yesterday's high to yesterday's low, and holy smoke, okay, I know what I want to do today, but I knew it yesterday. And for example, there's a daily central pivot point, so now we're using pivot points, clustered over the 50%. And if I was a bull, obviously that's a buy zone, and I would expect it to go up. Did anyone's mind just explode? The key points to these are I'm using support and resistance, and I'm using trend trading tools if I believe it's trending up. But I'm also sticking to my bias. If I thought this was going to go up, that's how I would trade it. But if you're sitting around waiting for it to tell you it's going to go up, it's too late because it already went up by the time you realized it's going up. Mike just keeps Mike keeps a mop next to his desk, right? Every few hours, boom, there's a mess everywhere. Buckets. Right on, Mike. Well, at least you're with friends. Doesn't mean we're going to help you clean it up, but yeah. Okay. So again, if I'm a bull and I believe this is going up, now is there any reason that I could be bullish on this? Is it in the realm of possibilities? Yeah, it's plausible, right? Now let's fatten this one up. Okay, yeah, it's within the realm of plausibilities. Okay, so we're in the upper range of a pitchfork. Fine, so you're bullish and aggressive. Great. Yesterday's high, yesterday's low, essentially the range of the pitchfork. You got to buy a 50% retracement off the top, which doesn't sound too crazy to me. Okay, the 618 is actually the bottom of the channel. You could have been waiting for that, but you, at some point, if you were watching this, you would have noticed the consolidation around the daily central pivot point. Okay, and notice it's just an 80-20 if you want to go into that. Okay, 1380 up to 1420, and it stopped. So it's even just an 80-20. So actually nothing happened. You know, Wyatt says, will I go into it? You know what? There are very specific rules to trading an Andrews pitchfork. You know, maybe I can get my friend David Pegler to come in. He's actually studied it before he became a boot camper. He studied it, and I think took a course and read some books, and you know, he got pretty good with it. And then I taught him how to trade Forex, you know, using my way, and he just basically more confident in that, and I just never really saw much of it again. But he knows a lot of the rules and stuff. But at the end of the day, it's absolutely, totally not required to be successful. So Sam's like, oh no, another thing to consider? No, I really don't. One of the things I don't like about it is it's so subjective on how to draw it that, you could, I think if we all drew at Andrew's pitchfork, we'd all draw it slightly differently. But there's also, the actual study of it, because you might just say, well, it's a channel. Maybe up here you're bullish, maybe out here you're bullish but conservative, right? But David would tell you, if you touch the top of the channel, there's like a 72% chance you're going to touch the center line at some point, and then, blah, 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 blah. But at the end of the day, though, absolutely, totally not required at all. You could go through an entire Forex trading career and never use an Andrews pitchfork. Okay? But if you learned it and you stuck to it, I'm sure it would work well. Okay? It'd be fine. But the thing is, you have to be consistent in your behavior. Most people here are not consistent in their behavior, and that's one of the things that's holding them back. Yeah, should I throw down some Gann grids and stuff? So anyways, how about this? Let's focus for a second, okay? Let's focus. Maybe I shouldn't have done the pitchfork. You guys had mentioned about channels, and these are things I don't typically use. Let me get rid of it, and let me go back to the message I'm actually trying to give you. If I was a bull, because I looked at this chart, ta-da! Okay? Deep analysis here. I looked at the chart. It's going up. Okay? And I noticed yesterday was an up day. Yesterday's low, yesterday's high, yesterday's close. It closed higher than it opened. It's up. So what did I do? I bought it at a 50% retracement, okay, with the anticipation of it going higher yet again today, because yesterday was higher than the day before the higher before that, and the day before the higher before that, and the day before higher before that. So, I'm shocking you with my deep and detailed analysis. So all I decided to do as a bull was buy a dip. That's all you need to be able to do. Now, do you need to use the pivot points to do that? No. Do you need to know Fibonacci really to know that? No, not really. Even moving averages? No, not required. The thing that's going to make you successful as a trader, even without the fundamentals, is you look at this and you say, this generally seems to be going up, so I'm going to buy a dip. Everything else is just color on your chart. Now, the algorithms are there to help that decision process perhaps be easier, but as you can see, if you overdo it, you get the analysis paralysis where you don't know what it's telling you, and you get too reliant on the pretty colors. So I'll give you an example. When I was in college, I used to work for NASA. I was going to be a pilot. The reason before that is I was tested to be a pilot for the U.S. Navy. I was Top Gun qualified. I was going to be a pilot, and then I was going to be an astronaut. And then on my first day in the United States military, which is kind of a funny thing to do as a Canadian, but on my first day in the U.S. military, you go through medical testing, and that was the day I found out I was diabetic, and that was the day I was kicked out of the military. But I did all the testing, interviewed every branch in the U.S. military, all that kind of stuff. So before I was a successful businessman, I was a successful potential fighter pilot type guy. Okay, fine, Top Gun. That's where I started. When that didn't work out, then I said, nah, I'll go be a successful business person. I got that out of the way. So anyways, I got kicked out of the U.S. military because I had too much sugar in my urine. Sad, right? But I decided I still loved airplanes. So anyway, I'm in college, and I get a job working for NASA, and I was actually flying flight simulators for NASA, doing virtual reality before you even heard of virtual reality. How cool is that? What an awesome job that was. I used to sit on the tarmac and watch, C-130s and U-2s and various other helicopters doing like touch and goes and stuff like that. I'm like, wow, that's crazy. Was that a U-2? Wow, and I'm eating my sandwich. So anyways, and I did dock I was a commander of the space shuttle, and my team docked the space shuttle at the International Space Station, in simulation, of course, but actually did that. Right? But anyway, so one of the things when I was doing my heads-up display research kind of stuff, one of the things that we talked about was when the U.S. entered the Korean War, I think it was, when we first got to jet kind of situations, the U.S. pilots got shot down a lot. And the kill ratio was really low. It was almost 1-for-1. So you'd send up a pilot, he'd shoot down a MiG, and then he'd get shot down, and it was sort of a zero-sum game, a game of not a fun game. So anyways, they created heads-up displays, and they thought it'd be really good if a pilot could go up and fly the plane, but also do the weapons and stuff too. It got really complicated. This is all before computers, right? So you had to do a lot while you were flying, and you wouldn't pay attention, and it was really difficult to shoot another airplane down because you had to do so much manually. And you had to look down to do it. You imagine you're flying, trying to shoot a target down, and you're looking right down at the panels, and you're adjusting this and adjusting that, and trying to fly the airplane and keep up and adjust this and adjust that. So they invented heads-up displays, and I think they came out early in Vietnam, along with Top Gun. The Top Gun school was created to also teach combat training, because before that, pilots would just go up, fire a Sidewinder missile, a heat-seeking missile, and it would do all the work. You didn't even have to really do any dogfighting. Well, then that changed, and so two things happened. The U.S. pilots were actually taught how to dogfight again, but that's what Top Gun was, Top Gun school. The second thing is they invented heads-up displays, and the kill ratio skyrocketed. One pilot would go up there, shoot down 7 MiGs. And guess what happened next? They would come back to base. They get ready to land the plane, and they're staring at the heads-up display. They would land it on the runway and then drive right into a parked airplane. Boom! Because they were staring at the colors. They were staring at the heads-up display, but they weren't looking through it. You see what I mean? So they could see all the relevant information right in front of them without having to look down. That's the heads-up display. So they see the, right? So anyways, and instead of like seeing the airplane in front of them, they were just staring at it. So they would just drive their airplane straight into another parked aircraft and destroy both airplanes and maybe kill themselves. Without just saying the obvious, like, whoa, there's an airplane in front of you. You didn't see that C-130? I was staring at the heads-up display. Funny, right? So it's kind of like, look at your charts here with all these pretty little colors. And you got 95 different levels of support and resistance. You got 19 different moving averages and pivots on top of pivots on top of pivots. And then you got multiple time frames. And, oh, man. Isn't it going up? Right? We got to scale back the technology. Right? We got to scale this back. Right? How could we do this? How could we do this? How about, wonder if this will let me do it. I don't have anything on this. What could we do? Okay. And then maybe we could even change that. So we have one trend indicator and then price. Which way is it going? Is it going up or is it going down? Okay. So on these little dips, why don't you buy it? So I might just say something like, oh, I don't know, about somewhere around here. Okay. So in fact, though, I prefer, there you go. I prefer like drawing things like this, right? Connect this to that and bring it over. Okay. So now I have trend and I have price action. If I think this is going up, I'm going to buy a dip at support. And I'm done. There's my career, guys. Don't need Andrew's pitchfork. Everything else is just adding more complication to your heads-up display. You don't want to be one of these guys that's looking at 95 different pieces of information on the heads-up display, right? And then drive your trading account into the ground. That used to happen too. Right? You'd be staring at the heads-up display and the plane would just fly into the ground or fly into a building or fly into a tree or hit another aircraft in the sky because he wasn't even looking at the obvious. He was just caught up in all this data. So you got to stay focused. One of the things they used to do to me is they'd sit me in a simulator and they're like, all right, fly this aircraft, follow this target, and we're going to score you on how well you chase this target. So I'm flying and I'm chasing the target, chasing the target, chasing the. Then they're like, oh, by the way, you got 3 buttons on your left side and you got 3 knobs on your right side. And as you're flying and chasing the target, we're going to flash something on the screen. And you're going to be required to, depending on what we flash, hit one of the 3 buttons on the left, or twist one of the dials on the right in the according fashion, and we're going to grade you on how well you do it. Plus, we're going to grade you on how well you're also flying the aircraft against the target. So now I got to do that, chasing the target. Oh, hit the blue button on the left. Oh, twist the 3rd knob on the right. Oh, do this, and it's getting faster and faster and harder and harder, more complicated. And then all of a sudden, alarms would go off and lights would flash and and they're just trying to do everything to distract me. And you just get really, really good at just staying focused. And that's what I'd rather you have, is just stay focused. Stay very, very, very focused on what you're doing. right? Are you a bull or a bear? Are you buying? Are you selling? Right? That kind of stuff. Sometimes you don't get what you want. That's all right. See, I would have wanted like a pullback to here. Maybe you did get it. And then the next pullback, maybe you had it this way. Right? And then later on this way. But ask yourself, what is the trend? And if the trend is up, buy dips at support. So, like I've always said, all right, if it's support that you're looking for, identify the nearest level, right? The 2 or 3 levels. Usually 2 is enough, right, for the day. 2 levels of support, and then buy at that area. So Mike says there are lots of different ways to identify support and resistance, and I would agree with that. But I've developed a point where I can focus very, very sharply, very, very quickly, and I only see what I need to see. So I tend to have on some of my charts a lot of data, but at the end of the day, this is all I see when I'm looking at something that might have way more stuff on it. That's all I really see. Up, and I'm buying dips. Okay? I want you to think that way. If it's going up, you're buying dips. If it's going down, you're selling rallies. Okay? So I do that when I'm golfing too. I can chit chat and have a good time. I'm smoking a cigar and, telling jokes and everything's good. And then all of a sudden it's my turn to putt, right? I just walk right up the ball, look at the cup, look at my ball, putt, done. But I'll do more in that 3 seconds than someone else that circles the green for 30 seconds. Oh, what about the slope? And what about which way is it going to roll? Oh, blah, blah. I'm like, dude, the green's going to be the same speed as the last 5 greens. Look, there's a slope. It's going to go from right to left. Don't miss it to the left. Come on, dude, putt. Oh, well, but what direction does the grass grow? Does it lean toward the water? Or does it lean toward the trees? Oh, come on, dude. I could do that analysis in less than a second. Get up there, look at the hole, look at the ball, make a putt. Mike's like, don't play golf. Well, or Guy says, be like an athlete, don't think about it, you're in the zone. Or you've just practiced so much. Or you've paid attention so much in the last 5 or 6 or 7 or 8 holes that you got the speed down, you can see the angles, you've already looked at it when you were walking up to the green. You get it. I mean, you've processed the information more quickly. So anyways, simplify, simplify, simplify. Because usually it's someone like that spends, 45 seconds analyzing this and analyzing that and analyzing that, and then he goes up, makes a putt, and leaves it 4 feet short. Like, dude, you never even had a chance. What was that all about? Oh, I grounded my putter. Yeah, well, next time, think less and pay attention more. All right, so bears are probably going to get ready, right? So this is what we planned out, a week ago? 2 weeks ago? Pretty interesting, isn't it? Where are we now? Let me zoom back in. We have our support, right? And yet it's going to go up to this area, and then I think it might go down. How coolio is that? Okay? So if you're a bear, however, and this is what I was talking about at this time, there are 3 levels of resistance if you're a bear. 1, 2, 3. Okay? So if you're a bear, we're getting closer and closer to the potential, bearishness, right? Right? Wouldn't you agree? And if bulls take profit there and bears short, at the very least, we got ourselves a range trade, at the very least, right? We don't know where it's going to go over the course of, the next 3 weeks to a month. But we would anticipate at least a range trade. Joseph says, do you think it'll go that high with QE happening? Well, the issue has to, again, it has nothing to do with the euro. The euro is constant. Quantitative easing makes it constant. So like on Monday when I reviewed the calendar, I'd look at things like, German CPI, French CPI. I'm like, I don't care. The reason I don't care is it's not going to change. No matter how good or how bad the number is, it's not going to change the central banking policy at the ECB. So that's what I do care about. So to me, the ECB is constant. So what's the variable? The US dollar. So why is the US dollar so weak? Why would it be so weak that even the Euro USD would go up that high? Well, it had to do with it being too strong to begin with. You see? It's not that it was weak, it was too strong. And now it's normalizing. Okay, retail sales 0.1. And a miss on inflation, guys. Negative 1% inflation at the producer level. Big miss. Okay. Long and strong, down to get the pippin on. All right, so again, is this people buying euro? No, probably not. Negative news comes out for the US dollar. Right? And so bears are simply just getting out of this pair. That's all it is. So Baltic Dry Index is way down again, guys. 787. So let me give you an update here on the markets. Okay, S&P up slightly, but we'll see how that goes later today. NASDAQ down 1%. T-note yield right now 2.02. Wow. Lots of people buying bonds. That's redonkulous. You know, a year ago, interest rates in the United States were 50% higher. 50% higher. Amazing. USD yen dropping, 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 dropping. US dollar weak, 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 weak. So the trend is pretty straightforward, isn't it? So why does the yen get strong? Do you want to talk about that while we wrap up? The traders of the world, traders and investors that are chasing yield, were funding their investments by borrowing Japanese yen because Japanese yen was free. It's not necessarily safe haven, but that's not a wrong answer, Jane, right? But let's go with this. They were, right, borrowing Japanese yen and using that to fund riskier assets. Right? It's called a funding currency. So if those assets suddenly are falling and they're losing money on their risky assets, they got to get out of that investment, right? That's fine. But then they need to pay back the loan, which is priced in Japanese yen. So they give the money back to Japan, and then they, stay out of the market. So they're simply paying back their leveraged loans, which means they need Japanese yen to pay back their loans that are denominated in yen because they borrowed the yen. Remember? So they put up collateral. So whatever money you have in your trading account now, whether it's US dollars like I have, or maybe you have British pounds in your trading account, maybe you have euro in your trading account, whatever. But if you were long pound yen, for example, you used your money in your trading account as collateral to borrow Japanese yen, and then you took that yen and converted it into British pounds. Basically what you did was you bought British pounds so that you could buy British bonds. You're actually a bond trader, right? Just think of it this way. If you put British pounds in a suitcase and kept it under your mattress at home, how much interest are you going to earn? None. Your bed doesn't pay you interest. So you're earning interest, aren't you? So you're actually buying a bond. You're in the money market. So you're a bond trader. You didn't know it, but you are. So anyways, let's see. Euro dollar is skyrocketing, probably close to 1% now. CAC is basically flat. DAX is down 1/3%. FTSE is down 0.5%. This just reported, this just in. The Colombian finance minister is happy that the Colombian peso is stabilized. Because I'm happy. How does it feel, Mr. Finance Minister, that now that the Colombian peso is stabilized? Like a room without a roof, I feel happy. All right, so some good moves here, guys. So take the old resistance, drag it across. That's my future buy zone. Okay. So this is a 15-minute chart. We were just down in this buy zone. Now we're way up here. That's how you trade, guys. And you just keep doing this over and over and over and over again. Any last questions before we wrap up for the day? By the way, 10-year T-note back at 2%. It's just redonkulous. It's such a crowded space. The prices are so high. Just makes me wonder, when does it all come tumbling down, huh? So, Michael, we instituted a chat at Forex.Today. Why don't you guys use that to facilitate a conversation? That's sort of the whole point. Okay? So if you register, right, all you have to do is click register, and a chat room pops up on the site. So you can go through all the analysis on the website, but also discuss trading ideas with your fellow currency traders. Yeah. You have to log in. Okay? Which means you have to register. If you register and then log in, not a problem. It just pops right up, boom. It's not even on, it's on every page. Yeah, Marina, I said I'd look into it. Let me do that for you. All right, guys, well, happy trails, happy pippin'. If you're having trading problems, feel sorry for you, son. I got 99 problems, but a pip ain't one. So peace on earth, may the pips be with you, may your profits be above average. And I will be here tomorrow, and the next day, 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 and the next day. I don't think I've taken a day off yet this year, have I? I don't think so. I know it's middle of October. I don't think I have. Did I go golfing one day? Richard, I've sent you an email about my... Yeah, okay, I'll have to look into that. It should be in your spam. Okay? Or you've been blacklisted. So I'll look at it. But I know Forex.Today pays for a service to ensure the delivery gets done, so it goes through a third party, right? But also, get this, the website is hit about 5,000 times a month with fake spammers and fake registrations and people trying to register just to post fake comments for ads 5,000 times a month. So there's also a service that filters all that out and blocks it, and it tracks, through various ways, postings on other websites, and then, just blocks all that. So somehow, maybe potentially, you got on a blacklist somehow, and you're being blocked. Probably not, but it's possible. So maybe I'll have to manually look into helping you. So I'll look into it, okay, Richard? Give me a day or two or something. Let me just see what's going on. So anyways, peace on earth. May the pips be with you. May your profits be above average. Dollar index is crashing. I hope you make a ton of money. Cheers.